That is correct, Brian. So we're here at the Sohn Conference in London, and joining me right now is Carson Block, the founder of Muddy Waters. You just came off stage talking about your latest big short. So tell us what it is and a little bit about the rationale.
Sure. We're short dLocal, which is a payment processor. It went public in 2021, and it focuses on emerging markets, especially Latin America, very fast-growing, margins that are far better than any of its comps. And the short of it is, we are highly concerned that this company is a fraud. So what we first saw when we looked at it were just revisions in what the company was saying about the components of its processing volume, and then also discrepancies in certain accounts receivable. And a lot of times when we see that's those sort of mixed or those contradictory disclosures, that can be because when you're not telling the truth, you kind of forget what you said before and things don't balance out. So that told us that there's a good chance there's something seriously problematic here. And then when we dove deeper into the company, we actually saw a series of events in accounting related to a loan that was actually made to pre-IPO to the president and the CEO, that the company seems to have taken pains to rewrite history. Now, our view is that either the disclosures around this are inaccurate, grossly inaccurate, as a result of a level of incompetence that few of us will ever experience in our lives, or it points to fraud. So likely they crossed the Rubicon there in terms of changing accounts when they shouldn't have changed them, accounts that diverge from reality. And then we get to these questions about how the funds move. So when you look at the company's accounts, remember, they're handling billions of dollars of other people's money per year. I mean, the annual run rate now is almost $11 billion. So at any given time, there's a lot of money sitting there that doesn't belong to them. And when we reconciled, or we did reconciliations for 2020 at the consolidation level, meaning what they report in the SEC filings, as well as one of the key subsidiaries, it doesn't reconcile. It doesn't. The company did not have the cash flow to make the payments in 2020 that it did. So that certainly brings up concerns about controls over client funds. Now, I will point out that the other possible explanations there are that the disclosures that we relied upon are inaccurate or they're incomplete. But again, we saw this at the consolidation level and at a subsidiary level, and the subsidiary level is a lot simpler than the consolidation level. So
that is quite a big allegation of fraud. I should mention also that CNBC have reached out to the company. They have responded with no comment.
Okay. I'm sure they will comment eventually.
Well,
yes.